What I try to understand is, on one hand, it's not that we had easy money policy from the ECB for the last 5 minutes, but we've had it for quite some time. But it seems that here we see, especially the private sector, still in a mode of deleveraging rather than taking that easy money and investing it. What's going on?
Several things are going on. First of all, the monetary stimulus by the ECB has been less than other parts of the world, no quantitative easing. Secondly, US did more fiscal stimulus for longer while the Eurozone went into a fiscal drag. But third and more important, that explains the credit growth, is the US recapitalized right away the banks to an injection of $700 billion into all the major and smaller banks who needed capital. Eurozone instead wasted 5 years in which the banks had bad assets, lots of leverage, and they were not recapitalized. And only this year, by the end of the year, after they do a comprehensive assessment, after they do an asset quality review, after they do another stress test, then they're going to figure out how much capital this bank's going to need, and then the banks have to go and raise this capital either in private markets or otherwise then the government has to recap them, and if the government doesn't have the money, the government has to borrow from the European ESM. So the Europeans have wasted at least 5 years. No wonder banks are contracting credit, deleveraging because they don't have enough capital.